Hello again, everybody. Welcome to another episode of Between Two Earnings Calls with Mr. Investor Relations. I'm your host, 𝗕𝗏𝘂𝘀𝘀, and in today's episode, we're going to discuss the investor relations job market for the month of July 2025. You may be familiar with the analysis that we put out a week ago around the second quarter of 2025 job market. So we'll start with our dashboard, which in any given month or quarter, we're expecting to see between 10 and 14 number one IR job opportunities, which will turn into 1 to 3 calls or a 10 to 20% conversion rate. And what we saw in July of 25 is that the market deteriorated from June in the second quarter results. We saw positive strength in terms of the opportunity set, as 19 opportunities were well above the expected range. But the negative side was in conversions. There was no follow through in the market in the month of July. As you know, with 0, we were well below the ranges that we expected. And ultimately, we think our data corroborates the negative data coming out of the July jobs report, which is why we think there's value in tracking this information. So let's get to the key trends for July of 2025 in the investor relations job market. And again, results were mixed in July, and I think it's tariffs driving the bus here. Total opportunities were above the expected range, but conversion was below the expected range, no follow through. So what are the key takeaways? One, August is actually shaping up to be significantly weaker than July. The IR job market doesn't seem to have a lot of follow through at the high end, especially the number one job market. And then our data corroborates the weak July jobs report data and suggests to us that a rate cut may actually positively impact the weaker job market, and that the 2 Fed governors that dissented and wanted to lower rates are onto something, that the impact of tariffs needs to be offset with interest rates to get the job market working again. Some upcoming reports that we have, again, we're going to do by market cap, a look at workday, and then next week we'll have our month of August report ahead of the August jobs data next Friday. A couple of high-level charts that we want to walk through here is this idea of looking at the historic conversion rate. And what we saw in July is our conversions were 0. And again, the result was well more than 2 standard deviations below the mean and outside of what we would have expected in a normal month. And we think, again, it's driven by tariffs, that what we're seeing is when tariffs become prominent, conversion goes down, and when tariffs sort of dissipate, that conversion rate strengthens or goes up. So now let's look at it to kind of prove this point that we just made. We've plotted it now on a monthly basis going back to January of 23, conversion rate, that is. And what you can see is, especially in 2025, we've had a 0 conversion in July of 25, March of 25, and January of 25. These were all periods marked by significant impact from tariffs. And this is where we believe that when tariffs become more impactful, employers back away from the market, put a pause on their searches and their hiring, and you see it in the data. So let's get into the deep dive of the data and show what happened in the month of July. From the total IR job market, we saw strength. Opportunities increased 7% year over year, and on the 2-year stack, they were up about 80%. The market seemed to be rebounding from tariffs, and the IPO window was opening. And really, the strength has been in the director level or below job market. Now, we saw a peak here in July of 25 with 32 jobs. The market hasn't been this strong since August of 24 and then September of 23 prior to that. And we were hoping that this was going to portend to a strong month versus the mixed results that we saw. So now looking at the number one IR market, opportunities were up almost 20% year over year. And on the 2-year stack, they were up 90%. This is suggesting a really strong opportunity set and strong market, showing the dissipation of tariff impacts and the IPO window opening. We were expecting to see a really strong month in terms of follow through. Again, you look at it on a monthly basis with 19 opportunities. We haven't been this strong since December of 24, and prior to that, September of 23. So there's a lot to be excited about, and it seemed that the strength here was coming from those dissipating impacts from tariffs. Now let's get into the conversion discussion, because it's a different animal compared to the opportunity set. What you can see here is on a monthly basis, we had 0 conversions in July of 25. There was no follow through despite a really strong opportunity set. And what we're seeing is that whenever we have a 0 follow through, it seems to be in these periods where tariffs are having an outsized impact on the job market. So looking at it a conversion rate, again, we're seeing the same thing. Hiring really has been weak, or the follow-through has been either weak or choppy ever since we had the election last November. And I think this is where it makes a lot of sense for the Fed to consider cutting rates to help improve the job market. Something needs to change with the job market because tariffs are really impacting the situation. Now, an additional analysis we're doing this time around is looking at Jobalytics score and days to rejection. So what we're seeing is that the highest keyword comparisons often lead to some of the quickest rejections. And the other side on days to rejection, the quickest rejections come from a Workday platform. And my commentary at a high level is that the market remains focused on what I call a PSA 10 resume. It has to be perfect. It's virtually impossible to find. And so a lot of good people are being excluded from opportunity because that personal touch is lacking from the job market. And finally, Workday seems to be more of a rejection tool than a tool to actually hire people when you're doing a job search. So let's start with this Jobalytics score. If you don't know what it is, it's a Google Chrome extension that allows you to do a keyword analysis. You can take a job description on LinkedIn, Indeed, or Workday and apply it to your resume and see how do the keywords match. 100% means perfect, 0% means you've got to do a lot of work. And what you can see here is that out of 10 opportunities we mapped where we got a rejection in July of 25, 8 out of 10 times we were 80% or higher. What Jobalytics will tell you is that you need to be 75% or higher to be competitive and considered for that job. And what's interesting is that the highest scoring Remitly and Daily Pay were 2 of our quickest rejections. So now let's look at our days to rejection analysis. And days to rejection is simply the number of days it took from when I applied to when I received a rejection from an organization. The second piece I look at is, was it through a Workday or non-Workday human capital management platform? And what's interesting is 2 of the fastest rejections came from Workday. Remitly, where we had 100% keyword score, and then Brookdale Senior Living, where we had a 91% keyword score, and literally they didn't even look at the resume. They rejected it within hours, essentially. Now, what's interesting is when you look at the non-Workday platform opportunities, you saw a greater than 5-day cycle to a rejection, which suggests that there was some sort of analysis or looking at it. This could be incorrect, but it's showing you that there's not seemingly an auto-generated reject behind the non-Workday platforms. And the other issue here is that Workday seems to be more of a rejection tool than selection tool. And it's important because when you apply to a Workday job or a job in Workday and get rejected, you're not allowed to reapply for that job ever again, even if it's reposted. And so that's where it can be a very punitive system for people looking for jobs or looking to grow in their career. So let's look at the job opportunity list for July. Hub International, Wabash Brookdale, Vodacom, Skyward Insurance, SPX Technologies, Digital Factory, Cardigan, Aflac, Remitly. These are some of the key opportunities that you saw. They're still out there. If you're someone looking, these are the places to look. And then finally, we get to the appendix. And again, you look at the conversion rate. We're seeing sort of a significant deterioration into 2025 that's even worse than 2017, which only represents the last 3 months of the year. So suffice it to say, the job market in investor relations seems to be really tough, and it's a really hard market for a lot of people at this time. And then in closing, right now we stand at about 25% of the New York listed companies and 17% of NASDAQ listed companies. We're going to continue doing this research. We hope you like it. We hope you get value from it. And thanks for watching.